Good afternoon, everyone, and welcome to Stock Market Today. My name is Ken Shreve, joined again by Ed Carson. Wow, what a day for the stock market. The Fed, as expected, raised their key lending rate by another 75 basis points, the third straight 75 basis point hike. The market sold off initially on the news, and then it rallied, and then we ended with losses of about 1.7, 1.8% for the major stock indexes. Joined today again by Ed Carson, like I said, and Ed has got three stocks to watch today. What do you got, Ed?
Yeah, it was a wild day for sure. We're going to take a look at Celsius, ATI, and Globalfoundries, three stocks that are holding up pretty well right now.
Okay, excellent. Well, let's start by taking a look at the Qs. I mean, the Nasdaq Composite was down 1.8%. Taking a look at the Qs here, you can see this is what we would call a pretty ugly outside day, Ed. Here. Very volatile. What was the nature of the Fed announcement? We were expecting some hawkishness today. What was your take on the Fed speak?
Yeah, it may have been a little bit more hawkish than people were expecting. At least they weren't completely expecting something dovish, which the last couple of Fed-related news items, people sort of were rallying into it. The 75 basis points people were expecting. They projected 4.4% at year end. That's basically where the market was. It's basically another 75 basis points, another 50 basis points, and you would get to 4.25 and 4.5. They see sort of what you would call a peak rate, a terminal rate of 4.6% sometime next year. That's up from 3.8% back in June. That's what they had thought back then. So a lot to go. Again, it wouldn't have been shocking if the market had rallied and closed higher. And for a while there, we did. It was, if you look on a 5-minute chart, I mean, it's all over the place today.
Let's pull up the 5-minute chart here while you're talking, and you can see. Yeah, this right here is when the statement came out, and you see that stocks whooshed lower. And then a big rally. I think the Nasdaq went up 1.6% on an intraday basis, and then the sellers just knocked everything lower by the close here.
Yeah, and also even if these had gone well, I mean, there's often a day two reaction. Maybe we'll reverse and go the other direction. It sort of had the feel. I mean, because we only have 2 hours to trade this, and really by the time Powell is done speaking, at most an hour. So it's almost like it's the beginning of a roller coaster ride, and we just stop it, and this roller coaster is just going to keep on going. But we'll see. I mean, the market is getting close to its June lows. It's losing. The major indexes are losing sight of their 50-day line. I mean, one good day, we're going to need a lot more than one good day. We need a lot of good days. And then maybe a lot of resistance levels. There's a lot of hurdles on the upside, and right now we can't even get that good day. Now. So,
yeah. I mean, just looking at the S&P 500, we've been talking about a market that's under distribution. That's why we're in a correction, and you can just see all of the above-average volume price declines in the S&P 500 over the past three weeks or so. And we got more distribution today as volume picked up quite a bit from what we saw on Tuesday. Now, Ed, you mentioned that the Fed right now sees the Fed funds rate at 4.4% at the end of this year, and you mentioned that may be another 75 basis points in November, another 50 basis points in December. But looking out into 2023, I don't think, at least right now, we're not really looking at more aggressive hikes by the Fed next year. It's maybe kind of a pause and wait and see. Do I have that right?
Yeah, maybe another quarter point or so. And obviously, all this is subject to change. I mean, we get a couple more data points and everything changes. But keep in mind is that there's a very good chance that the economy goes into a real recession. I mean, we were sort of been flirting, and maybe it was a recession, maybe not, but a recession that everybody would recognize is there. And the Fed may see that as necessary to get rid of inflation. But that's, higher rates and a recession is not a good environment for stocks.
And the Fed also significantly lowered their GDP projections for this year and next year. They now see economic growth, I believe, of 0.2% this year. And next year, I think the number was a little over 1% GDP growth for 2023. So here's a look at the S&P 500 down 1.7%. Again, nasty reversal into the close. And the Dow Jones, tracked by the DIA ETF, that was down 1.7% as well. And then finally checking in on small caps here, the IWM basically falling all by about the same amount here. Russell 2000 down about 1.5%. Notice that the 2-year Treasury yield held a decent gain throughout the day, but the 10-year Treasury yield reversed sharply lower here, Ed.
Yeah, I mean, there's also things going on. The 10-year yield's not just the Fed rate; it's also going to be the economy. So, sort of weighing this, there's a lot of aggressive tightening against the economy. So, and keep in mind it's down, but it's been relentlessly higher. 2-year yield did close off its lows, but yeah, over 4% now, really inverted. Now the yield curve is basically inverted from the 1-year to the 30-year. I mean, there's some weird bumps along the way, but the more inverted it gets, and the wider the spread is, it's shows the recession risks out there.
Yeah, it's almost like at this point the market is expecting a recession. It's just a matter of is it going to be a shallow recession or more prolonged, and what impact is this going to have on corporate earnings? We've seen a few Q3 earnings warnings. We may see now before the end of the month, but it's certainly a challenging stock market. It's really tough to make money on the long side when the tide is flowing negative like it is. So let's take a look at a few stocks that you found for us today. The first is Celsius, and I was watching Celsius when the Nasdaq started to move off lows and went up 1.6%. That was short-lived. It helped Celsius, but it got pulled down late with the broad market here.
Yeah, it's holding up reasonably well. It's right around the 10-week line on a weekly chart. It's a few weeks into a consolidation. The RS line is trading right around highs. I mean, pausing like this after running up, it basically tripled from early May to late August. Certainly worthy of a pause, especially with the market and the condition is. We'll note, as you were saying, it was moving up, or at least, or certainly, yeah, it was moving up when the market turned higher. And so I think that's the thing is, if we get one good day on the market, there'll be stocks like this, not necessarily this one, but stocks like this that will start flashing buy signals. And I think that investors have to be cautious. I mean, maybe that will be the one. Maybe that'll be the market bottom, or this will be the stock that just escapes higher again. But you also have to see, like, well, you can have what happened today is that you go higher and then reverse either later that day or the next day. And ultimately, things quickly deteriorate. So I think investors have to be cautious, not having that FOMO and wanting to jump on the earliest buy signal. This is why we talk about waiting for a follow through day, waiting for a real uptrend, because then you can have higher odds that, when you make buys, that they're going to work out.
Right. At least that's when the market tide starts flowing positive. So with Celsius, after a really nice run, it is impressive that the stock continues to hold support here. You can see 2 weeks ago, Celsius made a pretty good stand at its 10-week moving average and found support. Volume was pretty light when it did that, and then last week it tested the 10-week moving average again, and this week it looks like another test going on here. So we like to see conviction bounces off the 10-week moving average, or a conviction bounce off the 50-day on the daily chart. So we'll see if Celsius can ultimately do that. It's going to need a healthy market to make a conviction bounce here, and we'll see if we can eventually get it. Okay, moving on to ATI. This is a specialty materials company that the weekly chart here also has a good look to it, Ed.
Yeah, it had a nice move a few months ago, and it's pulled back sort of to the top of that base, the prior base, pulled back to the 10-week line. And, so that's setting up in a couple of weeks. It might have a base as well. I mean, theoretically, a bullish bounce off the 10-week line, as with Celsius, could provide a buying opportunity. It's a tough market. So you might see a bounce up and then pull back, and like continuing to find support. But look at that RS line. I mean, that's really impressive action. When you look at some other steel, when you look at steel plays, other metal type plays, this one is clearly the standout. We weren't talking about it for a while because it was extended. Well, now it's pulling back, and it may be setting up again. Definitely one for people to be watching.
Well, you look at the recent sharp pullbacks for Steel Dynamics and Nucor. This is definitely one of the metal stocks that is definitely fighting a good fight here. ATI, known for its titanium-based alloys, also is involved with nickel and cobalt, and in a lot of interesting markets, aerospace, medical, automotive. So good stock for the watch list here. All right, finally, take a look at a chip name. We've been talking about some chip stocks, a lot of damage in the chip sector, but a handful of stocks that are showing good technical action. So take a look at Globalfoundries. GFS is the ticker symbol here.
Yeah, this one's pulling back to the 10-week line as well after sort of running up quite a bit. This is a 2021 IPO. Not surprising, a 2021 chip IPO. Not surprising it's had some volatility. You could say it had a very deep double bottom base with a handle, but as you were sort of marking, that handle is going to be its own base at the end of this week, which is nice. So it's sort of like, and the 10-week line is coming up because at first, okay, it's got a handle, but it felt sort of extended and the market wasn't great. And now it's, the market actions allow it to pull back. The RS line is holding up pretty well. This is an interesting play here. It has a little bit of that geopolitics because it's in the U.S., not Taiwan. There's things to like about it. It's not actionable yet, but especially if the market could show some signs of life, this is one that seems to be setting up for another move.
Yeah, definitely. If this market can hold itself together, we've got three good stocks for the watch list. Stocks that could be capable of being market leaders going forward. Celsius, CELH, ATI, ticker ATI, and finally Globalfoundries, GFS. All right, Ed. Well, thanks very much for your input as usual. Just a reminder, folks. IBD Live is at the Market Watch Best New Ideas Money Festival in New York. They broadcasted live this morning from New York, and they're going to be there tomorrow, 9:30 a.m. Eastern Time, 6:30 a.m. Pacific Time. You can go to moneyfestival.marketwatch.com. I know Ali and Chris and Justin and Harold are doing some presentations there, so you can get more information at moneyfestival.marketwatch.com. They'll be there through tomorrow. So IBD Live tomorrow morning, 9:30 a.m. Eastern Time. All right, well, we'll see what tomorrow's market brings. Until then, we'll see you back here tomorrow. Ed and I again for another Stock Market Today. Have a great afternoon, everybody.